Hello everyone, welcome to tonight's video. Today is Friday, April 4th, 2014 by xfactortrader.com. Let's get right to the SPY. As you see, it looked like we broke above this trend line right here. It looked like a little bit triangular pattern, but it caught resistance here at this double top pivot right here. Whatever you want to call it, triple top on a little smaller time basis, but whatever this is, pivot high, I guess it's a triple top, failed to break out. Whenever you see this, it tries to break out. That's when the bears want to take control and see if they can get a nice reversal in trend. Right now, the bulls had a chance, and it reversed, and a little gap up, and now reversed. This is what you call, a bearish engulfing candle. Took out 4 days of gains, so that's what you want to see if you're a bear at the moment. The volume is pretty nice right now. I mentioned that there's a little bit of weakness on these other indexes like the IWM. As you can see, it didn't confirm above its 20-day moving average, and they're still declining. And it didn't make a nice pattern here for it to go long, and so it's coming back in. On the S, and look at the Qs as well. Q is pretty much showing the same thing. Didn't show relative strength above the 20-day moving average, and coming back in. So you want to see multiple closes above the 20, and you want to see the 20 start sloping up, flattening out. We're not getting that. See, it's declining. So you got to look out for that kind of pattern if you want to go long. You can't just chase it just because it breaks a level. You can't just go long there. See, if you want just based off a close off the 20-day, you're in big trouble right now. See, you have to wait for multiple closes, wait for these moving averages to kind of flatten out perhaps, and make a nice bullish pattern. And it never did that, so there was no signal to go long there. That's why I said minimally you're going to get resistance consolidation on the SPY at that triple top, whatever you want to call it, and that's exactly what we're getting. Look at that reversal, nice bearish engulfing candle. I like the previous candle to be a little bit wider, but it's still nonetheless still took out the last 4 days of gains, closing right on that 20-day moving average. Now you might think, why not go long here? Well, we didn't make a pattern. I said if we get a bullish pattern into this moving average, yeah, maybe there's a spot potentially you can go long for a nice breakout to new highs. I'm not saying that you can't still do that, but right now you are getting a short-term reversal. You got these reversal candles here, and it's been just chopping around. So that's pretty much your reference point now. Okay, this 189 is very powerful at the moment. It failed to break out right there, and it reverses on big volume. So you have to really, really watch out for this level right now. So your range pretty much is 189 on the SPY and change, and this 50-day moving average, which is rising here. So that's your range, that's your day trading range, or your trading range for the more near term and intermediate term. Okay, so these moving averages are now minor. Your major moving average now is a 200, never has been tested yet, which will coincide. They like to pierce these levels. Okay, so double bottom 200. It's by the time it gets there, we'll probably rise into it. So it's never that easy, but the 200 will still be major support. Okay, guys, that's some of the analysis over the moving averages. Over the indexes on this market. Let's go over Twitter. I did mention that it is making that bigger pattern on the monthly chart, and you can see this big up move and nice inside consolidation. Let's go to the monthly chart. I said all these levels were minor. The 50 dollar level on Twitter was minor. Got that bounce there. I played it here intraday. Now it's breaking down. Wants to come in. Okay, wants to come in and test this $40 level. I've been talking about this for quite some time now. So if you want to play this for long, so I might actually put this. Yeah, I will put this as a free trade alert. Twitter, your long opportunity is $40, 40, 50, $40 and change. Anywhere in the $40 number, that's where I'm going long. Okay, for a nice little trade here. Minimally, it's going to consolidate, and it's probably a tight range. If it's really weak, it still has to consolidate here for another month, just based off the chart. It doesn't just break support. This is a monthly chart, so one candle is 1 month of trading, so this should hold for at least minimally a month, in my opinion. Okay, $40. So you can play that for a week, a day, or a few days for a nice little long trade there on Twitter. Okay, a lot of people will play it here. Look at this big volume, nice inside bars here. It's a new issue, but right now the pattern is a pattern. That's a nice spot to play it. Your stop out is very low. You could have your stop at even 39, but I'm definitely playing that and putting it as a free trade alert. I'm gonna put that free trade alert right now, actually, after I do this video at xfactortrader.com. Been calling it out. So if you guys go to xfactortrader.com, I'll go over that in more detail with text, and I'll take a screenshot of it and tell you the targets, and I'll let you know when I'm seeing your stop outs and all that, whatnot. Okay. So people that were chasing up here, now there's an opportunity to get into the long side. This is where the pros enter. This is where the smart traders enter the trades. Okay, right at $40, your stop out's at $39, and your upside potential could potentially be back up to these midway point or even 100% retracement. Okay, so that's Twitter chart. Go back to the weekly. Weekly looks ugly, but this is going to be support, okay, guys, on the bigger time frames. That's why I mentioned the bigger time frame is a bigger setup. You look for a bigger move for a longer term period. Let's go to AMZN.com. I said that it was dancing around at 200. We'll see where that breaks. I did mention if it starts trading below or on this, if it keeps making the sideways pattern, I said I like to give it like 3 days, 2 3 days, it doesn't bounce. I don't like it anymore. You get out, and sure enough, you made a nice bear flag on the 200, and you're getting a nice downside move. And now you hit this gap. See, we got a nice bounce off gap fill, which I drew that line in. Got a nice gap, nice bounce there. Let me draw that straight across there. Should be a nice, beautiful bounce, technical bounce there on Amazon off that gap fill. See, that's why you want to line up multiple factors. I call them X factors. That's why we're xfactortraders.com. All right. xfactortrader.com. Check us out, guys, for a 15-day free trial. But look at this gap fill. Look at this 200 pierce. Look at that nice bounce. And sure enough, that's when you take off some profits and put a break-even stop at your at your entry. And now you stopped out, but you still got a nice little gain. But you potentially could have gotten up back up to these 350 area. All right. So that's how you trade it pretty much. And that you line it up with multiple gap fill, 200 moving average factors. Okay. Now you go look at the next level here, gap window, which you're already getting a bounce. Gap fill is just below it, and you're already getting a micro bounce now. But this red line was my level, and we got a nice pierce and bounce intraday. So if you played this, you're in the money a little bit. Now you put a break even stop and you see what kind of move you can get. Okay, if you close back below that red line, you stop out for break even. No big deal. But right now, you're getting a nice little bounce off the weekly chart as well. I believe you're at the 50-week moving average. So you have to watch all these time frames. The measured move does take you ultimately right here. It pretty much fulfilled target right here. So you have to always watch out for the current pattern as well. See this ABC, like 1, 2, 3 ABC pattern, bear flag on a weekly chart. It does come out to roughly this level, okay? So look for support here, and you have a trend line just below it. So 300, 306. Look at the bigger, longer term trend line, okay? Look at this. It's going to be very important on Amazon. Look at this. Look at this extended crazy move. You're right at the low. You don't want to be chasing up here at these, the higher band of these resistance trend lines. So you want to be picking them up here, and then you'll know if it breaks down. You can measure it out. It looks like if it measures out to the 200-week moving average, if it breaks this trend line. So watch out for $300 roughly in this area. That's where, if you want to be a swing trader right here, this is where you look to pick it up after this fulfillment of this pattern, $300 level. Roughly 310 is the measured move. So maybe it has a little bit more ways to go. But right now this trend line is coming up, so this is a very important spot. If you're an options seller, you could be selling options below 300. I mean, that would be a pretty good idea. I don't think it's going to break right away on the first hit. Usually it needs to consolidate first, and the measured move has been hit. Unless it makes another pattern, another pattern usually has to develop before another move can continue. So that's another option for option sellers, and I'll have those available at xfactortrader.com under the gold membership for swing traders and investors. Nice option selling strategy there. Right now, it's a good idea to be selling options below $300 for premium on a weekly or monthly basis, whatever your time frame is. That's Amazon.com. Google, I mentioned, is problematic when you have leading stocks like this making bearish patterns. I mentioned this the last video, that why is the SPY at all-time highs looking to break out? And I mentioned that could be a fake out, because look at Google. Look at these leading stocks like Google. Why is it making a bearish flag? Why is it making a bear flag here? Why is that? And it goes right into double bottom here, and you draw this. This is going to be short-term support on Google. Look at this bear flag playing out. It has more ways to go based off the measured mood. So just because it stopped here doesn't mean it's going to bounce here. But nice little pattern here on Google. Long opportunity is obviously the 200 with these pivots here. Okay, look at the weekly chart. Every Friday, you must look at weekly closes. I always look at weekly candles, see how the week closed on Friday. So looking pretty weak here. Went sliced right through this minor moving average on the 20-week moving average. So you want to pick it up right here. This is going to be support here at the 20-week moving average. I'm sorry, 50-week moving average at $500 on Google. So that's going to be important on the weekly chart. Let me go over why is it's not right here. Let's see. I might have had a reverse split. The numbers are different right now. Okay, so that does look like that's the case on Google. Right now, $500 level is very important on Amazon. I'm sorry, on Google right here at $500 at the 50-week moving average. Okay, let's go over Tesla. Haven't looked at Tesla in a while. Making a nice little, inside bar pattern. Let's see. Let's pull back the chart. So I mentioned that it could look like a nice weekly bullish pattern, but see, it failed. And I mentioned that it broke this line. So that's why you always have to wait for the pattern to fully develop. Right now, there's nothing to do here. I mean, you are into this previous. That's the only support I see right now, major support, and this obviously this 20-week moving average. But right now it's right at this previous high, and it's making a nice little. It's pretty much basing out here. So $200. That's where your support is on the weekly chart in Tesla. Let's go to daily chart. Pretty, yeah, same thing, catching the 20-day moving average as well. But look at the moving average is starting to, yeah, it could be if the market falls, obviously, Tesla's going to fall. And maybe it needs to test this 200, okay, like the SPY. But nothing really to do here on your level to watch, like I said, in Tesla's 200. If you want to play for the long side. And I think I mentioned that here, and it's already coming back in. So you already got your bounce. So I would be, I would step aside on Tesla right now. I already got that bounce right here, a little baby bounce. And it looks like it could come back in as a bearish kind of retracement and then come back down more. Okay, so nothing there on Tesla. Let's go over some of these other stocks that I've been mentioning. Ford, if this market falls, this pattern could still play out. Technically, it did close back below the 200, but I'm not liking it as much anymore. It's still above the neckline on the head and shoulder pattern, so I'm rating it more of a neutral now. If I see more signs, then I'll jumping back in on the short side. But right now, it did close back below the 200-day moving average on that big sell-off today. The weekly chart, it did not close. It closed right on that 50 moving average. But I mean, this pattern still could be in play. But it did close, like I said, above this neckline. Whenever you do that, just get out on the weekly close. That was your last chance. If it closed back below the neckline, then yeah, you might get a nice little narrow candle again right here, which failed, and you can probably play to the downside. But right now, I'm at rate as a neutral right now on Ford. Okay, it's a nice long opportunity, a short opportunity, but it did fail. Let's go to Netflix, which was my other alert trade to the long side. Let's see if that triggered. Not quite, not quite, not quite. It did not trigger on my Thinkorswim account, so I'm pretty sure it didn't. But it could play out. It's only a little more to go. $12, 320 is where I'm picking it up. Did not hit my trade alert. Oof, right at the 200. You can even start nibbling now, honestly. Even though it did pause right here, but you do have a gap fill here. It's just a good setup. It's just you don't see setups like this often. It's gonna get a bounce here. I would like if it didn't bounce here. Kind of takes a little bit away from the trade, but look at this 200 moving average and gap fill. Okay, let me refresh this page, guys. So I'm definitely go long on Netflix there. It's at xfactortrader.com under the tab free trade alerts. I will be adding another trade alert on Twitter today. So those will be added. And those, pretty much those are your test runs. There's a free trial as well, but pretty much you can be getting trades like that in our membership services and more detailed trades. You can get intraday trades and you get much more setups once you are a member. But the free trades are good as well. But I will be putting those out often. But once more members start flooding into our membership, I won't have time to put in those free alerts. So once take advantage of them as you for now while they're free, and they will be in ample supply. Okay. So this 200 is looking very nice, rising right into this level gap fill. This is really the target zone right here, 318 right here. This is your buy zone right here. But anywhere in this vicinity, this is the higher band of the buy range right here, 330 to 320 as I wrote that out. Your gap fill is right here. Let me see if I can get that in now. That gap fill, upper gap fill, lower gap fill. So this is your buy range right now. It could be starting. So if you're, you never put more than 10% right in one position. So you could probably enter right now half position, 5% right now, and then your next 5% will be right here, right? And you should get a nice trade there. That's how you play it. Oversold. Look at this stochastic. Oversold in the dailies. Look at the weekly. Now this could be a sign of a breakdown on Amazon. Look at what Apple did. But doesn't mean you can't play the short-term bounce. Okay, there's profits to be had. I don't care if the market goes up, down, sideways, all around, as long as you can play. Take a little bites out of the market, and this is how you do it. This is how you do it. I mean, you always wonder how traders profit consistently. They're patient. They wait for setups. They wait for levels to get tagged. They wait for patterns. Wait for good setups like this. And this is the buy level on Amazon right now. On Netflix, I'm sorry. On Netflix. Right here at the pierce of the 20-week, 50-week moving average gap fill on the daily chart. 200 on the daily chart. Right? Monthly chart. Let's see what we got on the monthly chart. Not much on the monthly chart, but you're still riding this, 10-day moving average. So still riding this trend on a bigger time frame. No problem. Okay, so that's your setup on Netflix. I might do an update on that as well, and I will definitely add another free trade alert today on the website. So definitely look out for that. Well, maybe it's a head and shoulder pattern. It's a rounded top here. Maybe it needs to test this pivot, make a nice little neckline here. Okay, that'd be a nice little setup right there to go short once it actually. So you can go play to the long side. Once it makes a nice retracement, if you think this is a longer term top, you could probably play it as a on the short side, on a retracement off this move right here, down move. Maybe it makes a nice 50% retracement into these moving averages, and then play it as a head and shoulder. Okay, but right now it's not formed yet. Okay, so let's wait for the short-term bounce, and I think it's coming right now in the coming days on Netflix. Okay, let's go over. Is there anything else I want to go over really quickly before I take off? Let's go over CELG, just because I went over it the last chart and see how that's coming through. And then right now, mention that right there. Head and shoulder, retesting this two moving averages, neckline. Right here was your spot. If it got a little bit higher, but it already got a 3-day move with a nice little doji. Wow, nice little sell-off. This pattern is going to take us a lot lower. See, wow, beautiful, beautiful, beautiful. 121 is your target. So head and shoulder looks like it's going to play out beautifully to the downside on CELG Corp. Okay, so let's see how this market plays out next week. But that's very bearish on the bearish bullish engulfing candle on the daily chart on the SPY. Really quickly look at the XLF. Nice, same little candle. Like I said, failed to break out. Coming back in on a bigger candle, on bigger volume. This is your range on XLF right here. This highs, draw it across, can get above it. That's your resistance, clear resistance level. Support right here. This was previous resistance, now support. So draw that across. Lines up with the 50-day moving average. So this is your trading range on the XLF. And let's see where this market takes us. Let's close on the SPY right now. Bearish engulfing candle, guys. Like I said, pretty much the same deal. These other indexes, same. This is your trading range, but there's little cracks in the ice right now. Okay, guys, look at these high volume sell-offs, light volume up days, failing to break out to new highs and reverses on a bigger sell-off candle. Okay, on a bearish engulfing candle. Okay, guys, this is xfactortrader.com. Check us out, our website. It's there for the taking. 15-day free trial. I will talk to you guys later. Have a great weekend. I will. Nice profits this week. I hope you guys had the same success I did, and I will talk to you guys next week.